How much do you have to invest in order to receive $1,000 a month in dividend income? While most think you would have to invest massive amounts in order to make $1,000 every single month in dividends, with the right strategy, you might actually be surprised how little it takes. Now, there are a few different strategies that you could use in order to get to $1,000 a month in dividends. So in this video, we'll be looking at 3 different strategies and discussing which is best depending on your goals. For scenario number 1, we're going to be looking at Visa stock ticker V. If we jump over to my dividend breakdown sheet, come up here and plug in V and hit enter, you can see all this data will automatically load in thanks to the help of the ticker data add-on. And like always, if you'd like to be able to get the ticker data add-on and be able to download any of my spreadsheets, then you can head over to tickerdata.com at the link in the description. But if we come down here, we can see Visa has a low starting dividend yield, sitting at 0.73%. So in our scenario, again, we want to make $1,000 a month in dividend income or $12,000 a year. So with a starting dividend yield of 0.73%, how much do we have to invest to make $1,000 every single month? And to find that out, we can just take our yearly dividend income and divide by the starting dividend yield and hit enter. And we can see in order to make $1,000 in monthly dividend income from Visa immediately, we would have to invest $1.64 million. That is a massive amount. So let's look at scenario number 2 and see if we can find a faster way to live off dividends. And this time, we're going to be looking at a higher yielding stock, and that's Altria Group, stock ticker MO. If we jump over to my dividend breakdown sheet and come up here and plug in MO, and what we can see is this company has a starting dividend yield sitting at 7.56%, quite a bit higher than Visa. So if we jump over to our scenario number 2, this time let's come up here and plug in 7.56%. So again, we'll do equals, we'll take our yearly dividend income and divide it by the starting dividend yield, and we can see in this scenario we get a much lower number. In order to make $1,000 a month from Altria stock, we would only have to invest $158,730. That is a massive difference from the amount that we saw we would need from Visa stock. But stay tuned because this still doesn't tell the whole story. For scenario number 3, let's look at a dividend ETF, one of my favorites, SCHD, the Schwab US Dividend Equity ETF. If we go ahead and jump over to scenario number 3, we can see SCHD starting yield with the ticker data add-on in Google Sheets simply by typing in dividend yield here. So when I hit enter, we can see the SCHD starting dividend yield is sitting at 3.43%. So it's kind of in between Visa and Altria Group. It's right in the middle. So if we come over here and select our yearly dividend income at $12,000 and divide by SCHD starting dividend yield, we can see in this case, as of right now, in order to make $1,000 a month in dividend income, we'd need $350,000 of SCHD. So at first glance, it seems like making $1,000 a month in dividend income can actually be pretty expensive. But again, we haven't looked at the full picture yet. You can actually invest even less and still make $1,000 a month in dividend income. And the reason we can invest even less and still make $1,000 a month in dividend income is because of the dividend snowball effect. The dividend snowball effect takes place when 3 different things happen. 1, you make contributions to your portfolio. 2, you reinvest the dividends, and 3, you also buy stocks that are constantly increasing the amount they pay out in dividends. Let's go back and look at Visa, for example. If we jump over to my dividend breakdown sheet and plug in V, what we can see is yes, like we've already seen, they have a very low starting dividend yield sitting at 0.73%, but they are rapidly increasing their dividend payments. In 2013, they were paying out 35 cents per share, and if we look in 2023, it jumped all the way up to $1.87, and as of right now, it's $2.08 per share. So over the past 10 years, they've increased their dividend payments at a compounded annual growth rate of 17.35%. That is rapid dividend growth. Let's look at Altria again, for example. Again, yes, they do have a starting dividend yield sitting at about 7.56%, but over the past 10 years, they've also been increasing their dividend payouts at a compounded annual growth rate of 7.4%, and over the past 5 years at 4.46%. So what does this mean for us? Well, in reality, we can get our average monthly dividend income to $1,000 a month with much less capital than we've seen so far. The only caveat is you have to allow some time to let the dividend snowball effect take place. So let's go ahead and look at a scenario where the dividend snowball effect has time to take place. And for this first scenario, let's look at an example like Visa stock. We'll be assuming a 10% price growth rate, a monthly contribution of $500, dividend growth of 12%, and the starting dividend yield of 0.75%. I'm going to project out what that will look like in the future. So if we jump over to see what our results will be, we'll actually be pretty impressed. If we look at this right here, again, keep in mind, we want to see the point at which we're making $1,000 a month in dividend income. If we start to scroll down, you'll actually be impressed with how little we had to invest in order to get to that $1,000 a month in dividend income. And you can see it looks like right here. we start making $1,000 a month in dividend income from Visa, and we only had to contribute around $165,000, which is radically lower than the $1.64 million we would have had to invest up front. Now keep in mind, Visa still uses the majority of their free cash flow to reinvest back into the business. If we look at their free cash flow versus dividends paid out in 2023, the company generated nearly $20 billion in free cash flow, while the amount they paid out in dividends was sitting closer to about $3.7 billion. This means most of their free cash flow was reinvested back into the business so that the business can grow at a high rate. So their free cash flow payout ratio in 2023 was only sitting at about 19%. And the end result of this heavy reinvestment back into the business is we can see over the past 10 years, Visa's up 427%. Now let's look at a projection of Ultra, and in this scenario, we'll assume a 4% price growth rate, again, $500 monthly contributions, dividend growth rate of 4%, and their starting dividend yield sitting at 7.5%. And if we scroll down this time, the results are even more shocking. We can see right here, this is the point at which we're making $1,000 in dividends every single month, and the total contribution we had to make to get to this point was only $74,500. Now if we jump back over to our dividend breakdown sheet and plug in MO, now we also have to keep in mind, Ultra uses most of its free cash flow to pay out dividends. If we look at 2023, they generated around $9 billion in free cash flow, while dividends paid out was sitting close to $6.8 billion. And we can see on the free cash flow payout ratio right here, that was a payout ratio of about 75%. So the company is using most of their free cash flow to pay out dividends, leaving less capital left over to reinvest back into the business. So the end result of this is you'll probably see less growth in this business, and they're only up around 20% in the last 10 years if you don't also include dividends. So now let's look back on scenario 3, where we looked at the dividend ETF SCHD, a dividend ETF that has a great combination of starting dividend yield, dividend growth, and also sees share price appreciation over time. If we look at our portfolio projection, this time we're going with a price growth rate of 8%, monthly contributions of $500, dividend growth rate of 9.5%, and a starting dividend yield of 3.5%. If we start to scroll down, eventually we'll be able to see the point in which we're making $1,000 a month in dividends right here, and the total investment we would have had to make in order to get to that $1,000 is about $95,500. Keep in mind, in this scenario, it would have taken about 15 years to get to that point. But what if we bumped up our monthly contributions all the way to $1,000? If we make this switch and go ahead and jump back over to our portfolio projection, we can see we can do this much faster right here. In this scenario, it only took around 11 years. And keep in mind, during this time period, you'll also see share price appreciation. For example, in the past decade, not including dividends, SCHD is up around 110%. So again, there are many different strategies in order to maximize your dividend income over different periods of time. If you're someone with a long-term time horizon like me, you may want to consider stocks like Visa that continue to increase the amount they pay out in dividends every single year. Dividend growth stocks over the long term actually pay more than high yielding stocks. But if you're someone with a much shorter time horizon, someone looking to maximize immediate dividend income, then scenario 2, higher yielding investments, that's probably the best option for you. And then if you want to receive the best of both worlds, then maybe you want something in between. And I think SCHD is a great place to start with that in between stage. And SCHD is actually one of the largest holdings in my personal portfolio. And if we go back to that last example with SCHD, when we were making $1,000 a month monthly contributions, the long-term results are simply astounding. We could see at the end of a 30-year time period, our account value would be around $3.7 million. We can see the total dividends we would have received over this time period is around $1.3 million. And at the end of 30 years, the amount we'd be making in dividends every single month would be over $16,000. So remember, in order for the dividend snowball effect to truly take place, you need to make consistent contributions to your portfolio. You need to reinvest those dividend payments, and you also need to make sure you're buying stocks that continue to increase the amount they pay out in dividends every single year. Now, like always, if you'd like to be able to download any of the spreadsheets you saw in this video and also get access to the ticker data add-on on Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. And if you also want more information like this, feel free to sign up for my free weekly newsletter, link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.